Welcome back to Morning Trade Live. Time to focus on the bank stocks. Joining me right now, Tony Zhang is with us, Chief Strategist, Option Play. And so you're looking at some of these bank and financial related stocks. And I want to get into the details of some of the names that you like. But the big picture, why do you think the group has potential here?
Yeah, it really comes down to lower interest rates. We saw regional banks really kick off a bit of a rally here on the back of Powell's comments at Jackson Hole. You see KRE, the regional bank ETF, up over 6% in just the last week, one of the best performing industries right now. And it really comes down to lower interest rates. The regional banks have a fair amount of commercial real estate exposure. So lower interest rates is definitely going to ease some of the concerns around loan credit for commercial real estate. And just generally speaking, lower interest rates can potentially stimulate loan demand. And I think that's one of the things that a lot of these regional banks are relying on in terms of for top line growth. So from a macro perspective, you really have the lower interest rate environment that's driving this rally right now off of regional banks.
I want to get to Truist, but just a quick thought. On the last year when the Fed cut rates, they were concerned about the labor market. And then in the end, the 10-year bond yield went higher. How likely is it that you think that if and when the Fed does cut now in September and the rest of the year, that rates will go lower? Is that the most likely scenario?
That's the base case that I'm operating with at the moment. And I think if you look at kind of how the markets are reacting to Chairman Powell's recent announcement, I think that is also how the market is reacting. I do think that the difference between last year and this year has really been around the confidence for inflation. I think while there are some concerns around inflation or upticks in inflation due to tariffs, I think largely most investors feel that that inflation is moving in the right direction and that we're likely not going to see substantial upticks in inflation going forward. I don't think you necessarily were in the same position here last year at the same time.
Okay, so let's get to Truist. And I know this is a name you like, right?
Yeah, that's exactly right. Basically, you see a lot of these regional banks right now have very similar setups. They're basically breaking out from resistance levels while outperforming the S&P 500. But the reason I like Truist is really because, it's on the smaller end of the spectrum when it comes to regional banks, but their commercial real estate exposure is on the lower end, which I do particularly like. And, it's trading at a valuation that's more compelling than most of the other banks. It's trading at around 1x book value, which is actually a pretty significant discount to the industry, trading around 1.3x book. Excuse me. So if you look at the fact that the stock recently broke out above its $45 resistance level while outperforming both the S&P 500 and the financial ETF, this is really where I think you have a really compelling timing from a technical perspective, but from a fundamental perspective, the lower interest rates provides an environment that's supportive of these regional banks from a loan growth perspective and also from a risk perspective on the commercial real estate exposure that they have on their books. And then you have, in this particular case, Truist trading at 1x book value is really kind of what's most compelling, especially if you consider both top and bottom line growth. They're expected to be head and shoulders above their competitors. So the fact that it trades at a discount relative to its peers is really kind of what makes this most attractive. And despite being on the lower end of the spectrum and in terms of size for a regional bank, their options are quite liquid. And that's what I really like. It really kind of hits all the nails on the head with regards to technicals, fundamentals, and liquid options to potentially trade.
So the trade that you see here, certainly see a lot of upside potential, right?
Yeah, that's exactly right. What's really interesting about these, some of these banks is that from an implied volatility perspective, meaning how cheap or expensive their options are, they're incredibly cheap. The IV rank is in the bottom 10% over the past year. So meaning options are the cheapest we've seen over the last year. And I think the best way to potentially play for this upside, especially now that you've gotten this breakout here with strong relative strength, is to just simply buy a call option here. So I'm going out to the October monthly expiration option, I'm looking at buying a slightly in the money $45 call option on Truist, which is earlier today trading just under $3 at around $2.95. And what that gives you is an unlimited upside exposure. And this is a call option. It's around already more than around $1.25 in the money here, paying $2.95 for it. So you don't have a whole lot of room for this to break even. Your break even price is just around $48, just shy of $48. That's where this option strategy will break even. And my upside target here for Truist, even though this is long term, is in the high 50s, low 60s. So this is really where I think the trade structure here, using just a simple call option, is probably the best way to play for upside exposure right now.
And the Nvidia story, good enough to continue to drive AI demand? I know Nvidia is going back and forth today. We heard from Nvidia, but when we see the market at new highs today, the S&P hit a new high. Was the Nvidia story good enough to continue to drive the markets higher? What are your big picture market thoughts, especially as you take in the Nvidia numbers today?
Yeah, absolutely. I mean, by the fact that, as you said, the S&P at new records, I think it confirms the fact that we're not quite yet at the point where investors are truly concerned that AI has hit a bubble. I think there was some concerns of that, last week heading into Jackson Hole, whether or not technology is overvalued. And we're seeing quite a bit of rotation here, out of technology into sectors like real estate, materials, discretionary regional banks. So I think, that rotation is relatively healthy. The pace at which Nvidia grows ultimately has to slow down to some degree, and I think we're starting to see some of the limits of that. But ultimately, as Nvidia CEO said yesterday, they're still expecting $3 to $4 trillion of investment into AI infrastructure in the next decade, and that is really where they expect to capture most of their revenue. Nearly 70% of that they expect to capture, and I think for those reasons, Nvidia at the moment is going to maintain, this current price levels, and it is not yet, in my opinion, a risk to the overall market, a systemic risk that I think some investors may have been concerned about going into that earnings announcement yesterday.
All right, Tony Zhang, options play. Thank you so much. Good luck at the big picture and financials and such.